In this video, we're going to talk about the canal. Whoa, that sounds like a big deal, right? Yes, because right now the United States has officially announced a revaluation of its gold reserves. That means from the previously recorded value of just over 10 billion US dollars, it's going up to $1 trillion. How is it being adjusted? How is it being adjusted? Why are they adjusting it? Where are they adjusting it? And if the amount of gold stays the same, why is the price going up? After this adjustment, with so much more money, where is it all going to go? But honestly, everything I've just said probably sounds confusing, right? It's a bit confusing, isn't it? And honestly, most people don't really care that much. What people actually want to know is, if the price is adjusted, where will the price of gold end up? Because yes, it sounds like a big deal. In this video, I'll explain exactly what happens if the United States revalues gold, who stands to benefit, who stands to lose, and what you need to do to stay on the winning side. And let me tell you, whether you're already into gold trading or not, whether you're thinking about getting into gold or you're wondering if you should sell off and take your profits, the information in this video will help keep you from making costly mistakes with your finances, maybe even save you from financial ruin. This video is sponsored by Shining Gold. For those of you who've been trading or investing in gold for a long time, don't let anyone say you've been at it for years with nothing to show for it. Bring it on, everyone. If you trade with Shining Gold and manage to save up 168 baht worth of gold, you can exchange it for an extravagant gold necklace like this. Look at these two dragon heads. Or you could swap it for cute minimalist jewelry like this. If you want to trade gold and end up with something impressive like this, let me tell you, you can't just trade anywhere. You have to trade on the Real Gold app by Shining Gold. You can exchange it for real gold, and let me tell you, trading gold isn't as hard as you might think. With Shining Gold, you can start investing with as little as 500 baht. You can keep saving up bit by bit, and once you reach the weight you want, you can exchange it for any type of gold you like. Whether you want to customize it to look extravagant like this, or go for a minimalist luxury style, they have it all here. If you want to invest in gold and get rich without having to keep it in a safe, invest with Shining Gold. Anything can become gold at Shining Gold. Let's get back to talking about gold prices. Honestly, gold prices have gone up a lot today, so much that they're almost hitting the forecasts made by leading global financial institutions for next year. According to the numbers projected by two top global institutions, Goldman Sachs, for example, predicts that by 2026, gold prices will reach $4,000. But honestly, that prediction seems a bit low because as of today, October 14th, 2025, the gold price has already gone up to over $4,100 per ounce. And for next year, Goldman Sachs expects that in 2026, it will rise to $4,300 per ounce. As for another institution, JP Morgan predicts that the gold price should go up to $3,900 per ounce. But like I said, it's only October 2025 right now. The gold price has already shot up to over $4,000. So JP Morgan has also come out and revised their forecast, saying that next year it should go up to $4,068 per ounce. If you check again, it might even be higher by now. This means that people who held on to gold this time around didn't have to hold it for a super long time. Just holding gold without trading or selling it since January 2025 up until now, you'd already be up 50%. And if the price... This is just a forecast based on what global financial institutions are predicting. So by 2026, if you've been holding gold since January 2025, there's a chance you could see an 85% gain. But let me say up front, everything comes with risks. There's no asset that just keeps going up forever. Everyone needs to be prepared and brace themselves. So what are the major factors driving gold prices this high? Here, I'll skip over the reasons everyone already knows, like de-dollarization. Wow, the BRICS group, whether it's China or others, are all trying to de-dollarize. Things like wars, geopolitics, trade wars, these are the basic reasons everyone already knows that drive gold prices up, right? But today, what we're going to talk about is another factor, one that's really significant and has a huge impact on gold prices, and that is the United States revaluing its gold reserves. The authorities have increased the value of the United States gold reserves. Previously, the book value recorded in their accounts was about $11 billion, but now it's going from billions to trillions of dollars. Now, you might be wondering, how did they do that? The US still has the same amount of gold, but how can they make the value jump from tens of billions to $1 trillion? Let me break down the numbers for you step by step. First, let's take a look at how much gold the United States actually has recorded in its accounts. The US government has a total of 8,113 tons of gold listed in its books. Now, whether they really have that much or not, let's not get into that just yet. So, if we convert those 8,113 tons into ounces, it'll be easier to calculate the market value. That comes out to a total of 261,498,926 troy ounces. This specific total amount of gold is recorded in the books at a value of about 11 billion US dollars. And if you want to know at what price the United States has booked its gold, you just take that $11 billion and divide it by the 261 million ounces of gold. That will give you the exact average price per ounce at which the US has recorded its gold within its official financial accounts. It's at $42.22 per ounce. Wow, but the spot price today is already at $4,000, while the United States has it booked at just over $40. So the way for the US to increase the value of its gold reserves is actually very simple. Many of you have probably figured it out already, right? They just need to change the booked price from $42.22 per ounce to the gold spot price, or the current market price of gold. As of today, October 14th, 2025, the gold spot price is about $4,156 per ounce. The method is really simple. If the US wants to change the value, they just take all the gold in their reserves, over 260 million ounces, and instead of multiplying it by $42.22, they multiply it by $4,156 per ounce instead. So the result comes out to about $1 trillion, give or take. Okay, now that we've done the math, you're starting to get it, right? Do you get it? Some people are still saying, hey, I'm still confused. There are still a lot of questions. Like, if America has so much gold, why did they originally book the gold price at just $42.22 per ounce? Isn't that too low? Why did America do that? And then when the US says, hey, let's increase it. Gold reserve values, you see the picture now. Multiply it out, and America's paper wealth grows. But where does that extra money go? Honestly, people aren't really curious about where the money goes after the value increase. They want to know, how will this affect gold prices? The thing is, someone always benefits. Every opportunity has a crisis too. It's two sides. So what should I do? How do I stay on the opportunity side and not stuck on the crisis side? Let's go through each question. It's really something special today. Today's sponsor. So, the first question. America has so much gold in its reserves. Why book it at $42.22 an ounce in the first place? Why not just book it at market value? They would have been rich from the start. The answer is, the United States, you see, has a financial weapon called the dollar. The dollar is basically the currency at the center of the world's financial system. The world revolves around the dollar. And the only way for the dollar to maintain its position as the top global currency, as the world's reserve currency, is to not let any other currency compete with it. So, can the dollar do that? Yes, it can. Up until now, there hasn't been no global currency can currently compete with the US dollar. Some say the Chinese yuan could challenge the dollar, but it's not possible. The gap is huge. The dollar accounts for over 60% of global trade, while the yuan is only at 3%. How could it compete? Even the euro, the next closest reserve currency, is still far behind. It just doesn't work. So right now, against other major currencies, none can match the dollar. But if we're not comparing, among all the government-issued currencies in the world, there's only one thing that can compete with the dollar. The answer is, let's all say it together, yes, it's gold. Gold is the only thing that can stand up to the dollar. That's why every time the price of gold goes up, people see it as the dollar being pressured or threatened, and that causes the dollar to weaken. This is one of the reasons why many gold experts say that the real price of gold has been suppressed for decades. And this also includes the price of the gold reserves held by the United States, which needs to be kept in check so that the price of gold doesn't rise too high and overshadow the dollar. The next question is, what if the United States changed the value of its gold reserves from $42.22 to today's gold spot price? Would America instantly become richer? Of course, it really would, just like I said, because it would. Value on America's books, the gold, would go from just over $10 billion to $1 trillion. So where would all that extra money go? It would simply be added to the US government's budget. Right now, the US government budget is running a deficit of over 6%, so this extra money would go straight to covering that gap. Now, you might ask, would America really do this? Well, they've already officially announced it. And if you're wondering if it's ever been done before, the answer is yes. Back in 1933, President Roosevelt did exactly that. They once announced the confiscation of gold bars from the public. At that time, there was actually a law that prohibited citizens from owning gold. Anyone who had gold had to deposit it at the bank. After people brought their gold to the banks, the price of gold was $20.67 per ounce. But after President Roosevelt finished collecting all the public's gold into the treasury, he snapped his fingers and instantly increased America's wealth by raising the value of gold from $20.67 per ounce to $35 per ounce. That was one moment in history when the United States became wealthier just by changing the rules with a snap of their fingers. What happened was that they simply changed the price of gold. That's all. So did the US government get richer? Yes, that's the opportunity side. But who was in crisis at that moment? The people who were actually facing the crisis were none other than the American people, who were forced to keep their wealth in fiat money. Because when the price of gold went up, what did that mean? The value of the US dollar significantly weakened. So every single person who had kept their wealth in fiat currency, the moment gold rose that much, it meant that people instantly lost their wealth in the blink of an eye, just because the US changed the rules and the way they recorded numbers in the books. So you might ask, hey, how does something like this relate to me? Does it have anything to do with the money in my pocket? Of course it does. Back then, during President Roosevelt's time, ordinary people who did nothing wrong still had the value of the money in their pockets reduced, right? And at that time, the dollar wasn't even as popular as it is now. But today, the US dollar is used all over the world in huge amounts. Global trade runs on the US dollar. And anyone who holds their wealth in dollar-denominated assets, whether it's US government bonds or even countries that keep their reserves in US dollars or US government bonds, they're all affected. If gold prices shoot up that much, remember, when gold gets expensive, the dollar gets weaker. Anyone holding assets in US dollars will inevitably find themselves caught on the wrong side of this crisis as well. So before you ask, if the US raises the price of gold like this, what exactly is going to happen to the price of gold? Before you ask that, I want you to consider another question first. Who will actually survive this crisis? The simple truth of the matter is this: anyone who has accumulated assets on the same side as the US government. Basically, anyone who holds gold before its value is adjusted will survive. Those who have gold will see their wealth grow along with the increased value of gold. They'll be on the side with the chance to become wealthy and make it through the crisis. To put it simply, anyone who has protected themselves by holding gold all along, back when it wasn't that expensive, this group is the one that will survive. On the other hand, anyone who hasn't held gold, which is one of the main forms of protection, and instead holds mostly fiat money or cash, we have to admit that if gold's value increases that much, the value of fiat money will decline. So people who keep their assets mostly in cash are at risk of losing out, just like what has happened in history, as I've mentioned. And if you ask, what about holding gold in the form of gold contracts or paper gold, like gold derivatives? Will that survive? The answer to that is, honestly, it could go either way. It could work out, or it might not. Basically, if your gold is in the form of paper gold contracts or derivatives and nothing goes wrong, then you're fine. You'll still have gold at the contract's value, according to the price of the gold contract you're holding. But if those gold contracts or gold derivatives collapse, and no one knows for sure if or when that might happen, then you'll be caught up in that mess too. Because after all, gold in contract form is still just a contract. It's still not physical gold that you can actually touch like this. If you want it in this form, you have to go for physical gold, like shining gold. I'm going to talk about another method that the United States has used for decades to suppress the price of gold, which is trading gold through derivatives or paper gold contracts. Because trading through derivatives makes it look like there's more supply or that there's a larger amount of gold available. It's more than the actual amount of physical gold that really exists. For example, whether it's at the COMEX market or the New York Commodity Exchange or the London Bullion Market Association, they issue rights in the form of derivative contracts, right? These derivative contracts are basically gold that we trade in paper form. Sometimes the same bar of gold is used to back multiple paper contracts. Who knows how many times? One gold bar can be turned into several paper contracts. It happens so many times that the supply or the amount of gold appears to be much higher than what actually exists. This means that the amount of physical gold you can actually touch is much less than the amount of paper gold out there. And if one day people start demanding physical delivery of gold, which, by the way, many central banks around the world have already started to do, if the demand gets too high, the COMEX market wasn't designed to handle actual physical deliveries for all those contracts. So if there's too much demand for physical delivery, it could trigger a gold run, similar to a bank run. That's another reason, looping back, why so many central banks are now buying more gold. They're not just buying gold contracts, they're demanding actual physical gold to be delivered and stored at their central banks. So if you're thinking about saving in gold, you should save it in a way that allows you to actually exchange it for real physical gold, just like this, not just paper gold or contracts. With the Channing Gold app, saving gold is super easy. You can start saving with as little as 500 baht, and if you want to exchange it, you can do so starting from just 0.1 grams. Like I mentioned, once you've saved up enough weight, you can turn it into something like this. You can just slip it right onto your hand. Real gold just the way you like it. If you prefer, you can keep it as a gold bar in your safe, or you can have it made into a cute little necklace like this. If you want to choose a style, you can go right to the official Sheng Gold online shop. They have everything there. From crown-shaped earrings to necklaces and bracelets, they can custom make your designs because Sheng Gold has its own factory. As a wholesale dealer, they supply gold bars and jewelry nationwide and are Gold Traders Association certified. To see the real thing and pick something special, visit their store. Find them across from MRT Sam Yacht, Exit 2 on Sharoen Krung Road, near the old Siam Plaza. Look at this outside. How do you invest to shine from head to toe like this? Only at Ning Gold. They craft gold bars and jewelry into unique art. It is truly accessible to everyone, no matter your age or gender. Honestly, anything you imagine can be made of gold at Ning Gold.